Hello, family. This is Liz. Coming to have a quick chat today. Basically, it's a follow-up conversation about the Popeyes Chicken Sandwich Chronicles video I made a couple of months back. Just wanted to, follow up like I said I would, and take a look at the numbers now that the third quarter has ended. I want to take a look at the numbers and see basically just the impact that the chicken sandwich had on Popeyes numbers. And even though the numbers don't, specifically say, "Oh, this is due to the chicken sandwich," but we know, we know how to read between the lines, behind the numbers. Okay, all right. So going to their website, as I showed you before, Popeyes is owned by a company called Restaurant Brands International. And on this, once you get on the website, you can go over here to this section where it says investors. And then it gives you all the information that investors will need, like annual reports. And the one that I'm focused on today is the earnings releases. So going to take a look at that. Earnings for third quarter were not out last time. We were actually in the third quarter when that chicken sandwich was basically made extremely popular. So let's go ahead and look at the third quarter. And what we'll see when you get in here, basically there's a note to the investors. And here I want to specifically just talk about Popeyes, but like I said, or maybe I didn't say it this time yet, that RBI, Restaurant Brands International, actually owns Burger King and a company named Tim Hortons also, along with Popeye. So if you take a look over here on the top right of my screen, you'll see that this company does trade on the New York Stock Exchange, and you'll see that the share price today, or I'm sorry, as it closed yesterday, today is Saturday, $66.54, whereas last time I made a video, I think it was trading at around $75. So it's been a decrease in that share price. But over here, I want to point to this note right here. Popeyes records one of its strongest comparable sales growth results in nearly 2 decades. So basically, their sales went through the roof, higher than it's been in almost over 20 years. Okay, so looking a little bit deeper into the numbers, let's look at this system-wide sales growth. Just focusing on Popeyes, but I want to look at 2018 and 2019 third quarter that are being compared here. So looking at Popeyes down here, for 2018, third quarter growth was 7.9%. And then for 2019, system-wide sales growth, 15.6%. So basically, their sales growth or system-wide sales growth doubled, almost doubled in 2019. I wonder what that's due to. All right. So, and then going down here once again to look at their comparable sales that they mentioned at the top. In 2018, their comparable sales was at 0.5%, so basically less than 1%. But then looking right over here at 2019, comparable sales at 9.7%, so almost 10 times the comparable sales that they had in 2019 for the same period of time. So basically my point in saying all this and making this video, sharing this information, that, we should be investors, not just making some company grow, through the roof and having, the time of their life, the best time that they've had in their company for, over 20 years. But, we should be sharing in that growth also by investing in companies. This is not one of my companies. I saw things that I didn't like, but I'm not going to point those out right now. But if you want to know how to look at companies and how to evaluate companies and choose, companies that suit your needs and fit your criteria, then reach out to me. That's what we do in the Abakuas. We learn stock market basics, and then we grow from there, and we learn how to select companies and invest in companies. So this is Liisa, Liisa Barnes, Barnes. I look forward to hearing from you soon. You can find me on Facebook, Instagram, Twitter, and YouTube. I look forward to hearing from you soon. Thanks. Bye.